Well, hello, everyone. Thank you for coming back to CRA 102 or joining for CRA 102. If you didn't make CRA 101, we should be okay. How many of you were at CRA 101? I think most. Okay. So I'll give a brief overview over what the Community Reinvestment Act is and what that exam looks like before diving into how you can really engage with it and become a CRA advocate for your community. My biggest pitch will be fill out those little note cards that are in your folders to become a part of the Oregon Reinvestment Coalition if you're not already. I wish I knew more about what was going on the ground. I sadly don't, but that also means we get to pick on my local bank for examples in bad behavior because they in fact did fail their CRA exam. So we'll use them as the example so that when you go to your other banks, you can point to this bad actor that has no connections with Oregon. So it makes the conversations a little nicer. So the Community Reinvestment Act was a law passed in 1977 that provides an affirmative obligation to banks where they must in fact act and engage with their communities to meet the community's needs. And there has to be a focus on low to moderate income communities, and they cannot be excluded. So when you look at an assessment area, it is that whole assessment area that needs to be looked at. And normally a bank undergoes a CRA exam every 3 to 4 years. It's a pass or fail test, not the most in-depth grading, but that's how we're working. There's outstanding, satisfactory, needs to improve, and then failure to comply. So that's the grading scale we're working with. And with that exam, there's time for public comment, which is great for communities, clients, people who are using the bank or have not been able to access that bank to provide public comment to the regulators, to the banks themselves. But this can also happen during mergers, acquisitions, and branch closings, which we'll talk about more as we get into how to engage with the CRA. That is the fastest Cliff Notes version of the Community Reinvestment Act I can give you. If you have questions, raise your hand. I'll repeat the question to make sure I heard it right, and we'll go over that. Any questions so far? Okay. Hearing none, we're going to move forward. With the National Community Reinvestment Act, NCRC, who you heard mentioned at the lunch, we believe that the CRA works when we do the work, when the organizations that are on the ground do the work. And I neglected to introduce myself. My name's Rebecca. I'm an attorney with Legal Aid of Western Michigan, but I'm the former organizer for the state of Oregon with NCRC. I lucked out that NCRC knew I wanted to come back, so I was invited to be able to speak with all of you. So that's why I'm here. Plus, NCRC is a little spread thin today. I think one of us has 4 events. I only have 2, so I'll take it. So we do think the full responsibility for CRA enforcement has been the job of people in the neighborhoods in which those banks are in, which is that bank's assessment area. Next slide. So when we look at CRA enforcement, the question is, why do you want to get involved? Why do you want to add this extra thing to your plate on the fact that you're probably already doing more than necessary? We want to improve bank performance, especially when they're not serving anyone. We want to increase resources for community development. We want to direct more resources to the underserved neighborhoods. And we want to build partnerships with financial institutions that are beneficial to the work that you're already doing that may fall outside of traditional CRA work. Next slide. So this is where it gets weird and I get to be Vanna White. So please be patient with me if you have questions, because you're going to have a lawyer give you math. So this is the data you're going to want to pull from your bank when having those discussions. So let's say you're having a meeting with your local financial institutions, Community Reinvestment Act officer, or lending officers in that bank. You're going to want to know what their home mortgage data looks like, and then we will follow this up with the small business lending data to have a conversation on where are they doing well and where can they improve. Because you're going to want to know, is this conversation going to lead to anything? So this is a poll from US Bank. My guess is probably in 2014. So we'll see applicant characteristics, and we'll go race and ethnicity, income, and then we'll also get it down to the tract. This data was pulled by NCRC. We pull this for any bank as long as it's available. Please do not ask me how it is pulled. It is pulled incredibly well, but you're asking a lawyer how we pulled data. I trust the data team there. And they'll explain it to you as well when we break it down. We'll look at loan originations, approval rates, and denial rates. This doesn't capture every bank engagement that happens. So those are things you're going to want to talk about with the people you engage with in the community to understand how else are they operating with them. Are they providing language services? Are they providing a comfortable space for people to actually learn on how to bank, open an account, and those things? But this data is still really important. So we'll see there's a breakdown of the population. So in this community, we see that the population is 40% white, but when we add up all of the minority populations, we see this is a majority community. So just under 60% of the population is a minority and falls within that space. And when we pull this data, NCRC compares the bank that we're pulling the information from against all the lenders in that same assessment area. So it's apples to apples, not apples to oranges. So the argument gets harder for a bank to say, no, actually, we're not doing as badly as you say we are. We can go, well, we pulled from the lenders in your very own assessment area to see where we're at. We're not wanting to do an unfair comparison. We can also lower it down to certain bank sizes to adjust for that as well. And so in this example, we see that this bank is lending just shy of 17% less to the minority community than their lenders. So does it mean the minority community is getting full access to loans? Probably not. But it means that compared to all the other lenders in the area, this bank is doing a worse performance. So that's where we can start having a conversation about possible improvement. I just walked you all through math and a spreadsheet, questions, confusion. So this is where they're trailing. So they're trailing by 16, they're doing 16% less loan originations than what the lenders in that area are doing. So there's clearly a gap. They're missing part of the market. We're not expecting equal numbers to be had. 2 to 4% difference is usually pretty acceptable, but we're starting to talk almost 17%. And we're seeing that this bank does 10% more loans to the white community than their lenders. So we're clearly saying there might be something going on. It may just need to be a conversation about cultural competency, language accessibility that needs to be had, but it is worth digging and looking into.
Does the FBI there's a negative connotation there?
We would hope.
Pardon?
So the regulators will get to see this information. It is nicer when it is laid out by NCRC at community benefits conversations and meetings to really lay it out of going, well, compared to all lenders, here's where we are. This is what's going on. I haven't seen a CRA exam on what lands on a regulator's desk. But we do like to present this information to them, and that's why we do compare lenders to lenders so that we know where that's going on. But it's great to have community engagement to understand what's the actual impact there, because maybe they are trailing and they may have a very valid reason for that trail. But if we don't know that, you need to have that conversation to flush that out of going, okay, well, where is this? Are they building this? Did they just lose a market? Where are we going here? And doing loan originations is a great sample because that way we can see how many loan originations are happening to figure that out. And we also see that in this majority community, we also see there's a low applicant tract in a minority tract, which seems odd for this type of community when we look at it there. NCRC will also provide maps. So if you're more visual in the not numbers space, that can also help detail and explain that even further. to show where those actual tracts and assessment areas would be that may be lacking loans. And since you're on the ground, you would know, okay, this is this area. We know these communities live here, and here's how that would pan out. Then we'll see the approval rate and denial rate. And some information does get lost in here because not everything's reported, which is why it's good to be in touch with your local community and keeping track of those notes and engagements. Questions? Pretty sure we can always come back if need be. If you want to come to me separately, you can. So we'll go, and this is just home lending data. So we'll go to the next slide. And then we'll also look at small business lending data, which is really useful, especially when markets start to change. It's another way to look at this. So same thing, we'll pull low to moderate income census tracts, businesses less than $1 million in revenue. I'm unsure if NCRC will be adding micro businesses, which we just heard Umpqua Bank talk about as well. But let's hope that we look at that lending too. And that could be an additional conversation, which is great. Questions? Okay. And so we would do community bank compared to all lenders. We do the count of the loans and the percent. And then we'll see that this bank is trailing by 43%. So they're missing out on, they're doing about half of the business, less than half of the business that their peers and competitors are doing. So that would be a concern on, do they not have enough small business loan officers? Are they training new officers? Are these loan officers not going into the communities that they need to be? What's going on there? And that could be one of the conversations had. Next slide. So lending data is available. You can get it from the CFPB, and small lending data is available from the FFIEC. It normally doesn't come out that pretty, and it takes me like 20 minutes to figure it out on a good day. So NCRC has a lot of charts and explanations for any of that. If you're interested, I believe the Oregon Reinvestment Coalition gets updates pretty regularly on how communities in Oregon are doing as well. So if you'd want to plug into that, I would go there, and you'll talk to someone who knows more about the math and how that's all done. That would be Catherine at NCRC. She's phenomenal. So I'm going to direct you to her because she's a little better at it than me because it's her day job. Next slide. So we did talk about how to get involved, and I'm going to reiterate this. You'd want to identify a bank first. So we'll identify Fifth Third Bank. They're a bank in Michigan. They're the bank I've banked with since before I was born because my grandparents opened a bank account for me once they found out I was to be expected, which explains a lot on why my banking experience has been a positive one, which we'll get into. So we identify Fifth Third. Their primary regulator is the FDIC, and their CRA rating back in 2017 was they failed all on their own, spectacularly. And there's some pretty widely well-known discrimination in Detroit, and NCRC hadn't been involved until they found out about the failure. So that's the bank we're going to look at. Answer any bank you're interested in, and you'll take similar steps. So NCRC pulled their other CRA exams. They'd had a couple satisfactory needs improvements areas in their exam, because in the exam, you can get a good grade and a bad grade and possibly still pass. But their markings were kind of all over the map, so they should have seen that failure coming down the road. And then we looked at their assessment areas and then their lending data. And that's where we caught a lot of the major issues in Detroit. And then NCRC, along with all of the organizations in Michigan, Ohio, Indiana, and elsewhere, it was not my territory, so I'm not entirely clear on it, but they were my bank, so I did get to ask them questions. They provided comment letters, they became a coalition, and they entered into a community benefits agreement, much like the one you heard discussed at lunch with Umpqua Bank here. Questions? Okay, so we'll go to the next one. And so the other opportunities to engage are with mergers and branch acquisitions, which is how the Umpqua Community Benefit Agreement came to fruition. CRA performance evaluations, which is how Fifth Third failed their CRA exam. It was under a regular performance evaluation. And then branch closures, which is mainly public comment letters and good areas to have discussions with banks and financial institutions. Next slide. So we've discussed public comment letters before. It's great for consumers, nonprofits that work with individuals who are trying to get access to banking, home loans, small business loans, and that are dealing and working around poverty, because I do think banks could play a bigger role there. But we'll have public comment requests where you can support or oppose an acquisition or a merger, or even a bank closing. There can be a request to extend the comment period or to convene a meeting or public hearing. And this is where things can get pretty interesting because it really starts the conversation going. And then there is the recommendation that the OCC only grant approval if the OCC imposes certain conditions. You're really going to want to come and fully research there to understand what those conditions should be. And the OCC would need to be the regulator of that institution. So what you'd want to do when having these conversations is most likely you'd want to be in a coalition, just so that you have the numbers, you're hearing the same consensus that this bank is doing this bad behavior or could do better and has room to improve. And you're going to want to have the data to have that analysis and other information to the CRA's performance in the past and within the community. That on the ground information is vital, and how the organization or coalition can help improve that performance. So if you're working for a housing counseling network, we're not seeing first-time home buyers being approved for the loans that we know are available. Here's everything we know. What do you need from us to access these? It's gonna get tough given the fact that interest rates are rising. First-time home buyers may become rarer. I'm expecting, and every legal aid office in Michigan is expecting, more land contracts and possibly more personal loans to finance those land contracts. And it's going to be interesting to see if the banks are engaged with that at all. Now, I did have a land contract case where a credit union got involved, not a bank. And it's the first time I've ever had a credit union call me for a client. And it's because my client didn't understand what they were saying, which is fair. He's trying to speak legalese and financial to this credit union. This credit union is notorious for serving low to moderate income communities. Notorious might be the bad word to use there, but they're great. They're really helpful. They have fee-free checking accounts. They'll sit down with you. She called me with him in the room going, this is what I'm hearing. I think he's telling you what you told him, and I'm not a lawyer. And he needed to put his money aside for an escrow account because we were suing the sellers for fraud, bunch of miscellaneous other stuff that I'm not going to bore you with. But we wanted him to still make the payments, just to not give the people who are collecting cash payments every other month to get the money quite yet. And it also allowed me to show the court, hey, we're still making these payments. He's going to give this money. And the credit union gave me a call. We got all the releases signed, and we were able to set up that account. And let's hope, end of November, he will own that home. And that's because the credit union decided to get involved and check in with us, where I don't hear that from my clients when they go to the banks to be like, I need to set up an escrow account, or I need to set up a separate account to put my rent in until my landlord does the repairs. It's a bit more of a fight and a struggle. That's a wish list for the attorney in me. It may not be on any of your wish lists, but it's a conversation I think that we should be having on. Are these needs we need to have met? Do we need non-traditional savings accounts? What types of things do we want to see there? But when you're doing your public comment letters, you're going to want to have your data analysis to support what you're saying. Being in a coalition, we've seen has created more improvement and gets more money back into the community. So if we go back to the Fifth Third Community Benefits Agreement, we saw that Fifth Third was trying to buy out certain organizations with just kind of small dollars, $100,000 here, $100,000 there, while we were in negotiations for the CBA. Well, the CBA ended up being for billions, which led to a greater impact in the community than just one nonprofit getting some money, one nonprofit getting more money. So having that coalition and that united front can be really useful and do more for the community, even if it means the money is going to spread elsewhere. Next slide. And so in regards to mergers and branch acquisitions, there's a way you can track those branch acquisitions. NCRC provides reporting on that, I believe, every month, because banks must apply to acquire the branches or other financial institutions, and then public comment can happen there. And it's about a 30-day window for that comment to be provided. So you're going to want to know as soon as you hear about it. So set up those Google alerts for any of those banks you're looking at. Talk with NCRC. The Oregon Reinvestment Coalition is already here. So go into those that are already doing the work to keep one more task off your plate. And the regulators will look at the previous records, as well as how the expanding bank will serve communities going forward. And this is when we really have an opportunity to negotiate public benefits plans. Because again, as the CRA states, the financial institutions need to take into consideration the convenience and needs of the community to be served. So if that community is expanding, we need to know, are there different needs in this community? Was the bank we're acquiring doing a really good job and we need to adapt some of those practices and best practices? Or were there some really poor practices where we need to institute our best practices into it? And what is our game plan on how to do that? Questions? Hearing none. Next slide. Okay, so again, how we're going to get involved. The comment period is, again, 30 days. And we're going to see the comment date and end date there. And it's one of those things where you're going to really want to stay on top of that so you don't miss that window. Next slide. Next slide. So when you're going to want to comment on a CRA exam, you're going to want to look like, is that bank meeting the credit needs of the entire community, not just one segment of it, which is where we're going to look at the low and moderate income neighborhoods, which is where that home lending data and that small business data really provide you that picture on, are they actually meeting those needs? But the numbers are great, but the stories are really compelling. So as we saw, there was a trail in minority home loans. And if you can come in and say, we served 500 clients this year, 250 of them really struggled to get a home loan. They had to work with housing counselors. They had to go through credit repair in order to become eligible. That story is going to mean more because it's going to give, it's like when you're going to Congress. It's cute when you have the numbers, but it's better when you have that sad heart pull on the heartstrings story. So providing that information, showing that an organization like yours, especially if you're a housing counseling group or CDFI or any of the other organizations out there, that you can get people housed, you can get people running up, starting to run their own small business. You can show the benefit of when the bank engages, but also the harm of when they don't engage with the community. Next slide. And so branch closures are a more on the ground grassroots opportunity. So low to moderate income neighborhoods can request that regulators hold a meeting to discuss when a branch is being closed in their census tract and in their assessment area. Now, the regulator cannot prevent the branch from closing, but the public can still have an opportunity to discuss the closure and protest the closure. And this can result normally in a smaller type of public benefits agreement or delay of the closure or trying to figure out how do we fill in that gap. And branch closure meetings can be interesting. Some are as simple as, no, the bank's moving a couple blocks away, still in the area. We just hadn't announced it yet because the ink isn't dry on our new lease. That can solve a lot of issues, but it can also lead to banks possibly moving into some of the nonprofit buildings and doing checking account days, sometimes with the nonprofit organization, so people can come and open them. They may be helping people become more savvy with the mobile app holding meetings within spaces that the clients feel safe to do loan originations, do more financial literacy programs, and creative solutions can happen that way. It's not as good as having a local branch, but it can lead to some pretty interesting and collaborative results. Next. So when we look at a community benefit agreement, it's an agreement between the bank and CRCs usually involved and the members who are on the ground. So the local coalition, so it'd be the Oregon Reinvestment Coalition here, in which the bank will make a commitment to increase their CRA activity, usually in connection with the merger. So all of you who are at lunch, you heard about the community benefits agreement with Umpqua, and we see there, I believe it's in the billions for home loans. They're interested in doing more micro, small business lending, which is great to hear. And that's good to hear that that's going to be happening there. And that's a very solid commitment. So the goal is to increase CRA eligible mortgage lending, small business lending, community development, and philanthropy. And it's a commitment to actually address the needs identified by the members. And that's what's really important, because you can pull the data, but you're not going to get the stories. You're not going to actually know what the needs are. So in the last meeting, in the last presentation, we discussed there's a concern on the actual types of checking accounts and accounts that individuals can open up with their bank. That information really isn't looked at in the CRA exam, but in public comment letters and in these meetings, that's going to come out more. And there's the possibility that we might look into types of accounts and services with the new regulations, but that's not a guarantee. But having that information could lead to more commitments to more actual service types. Where are we looking for longer bank hours? Are we looking for different types of accounts? Are we looking for I-10 accounts? And those are things that don't normally show up in a standard CRA exam, which is why the meetings that come with comment letters and protesting a merger and acquisition and being engaged can come up with. And then we're looking for an actual community bank that's engaged with their affirmative obligation under the Community Reinvestment Act. And so when we agree to the clear metrics to evaluate a successful bank performance, everyone's on the same page. Next. So how do we get to the community benefit agreement? There's the organizing team at NCRC. I was here in 2017. This is when my little role here started. And that's when the Oregon Reinvestment Coalition started to form. And in the last 12 months, there's really been a lot more momentum and movement. So I would want to direct you to the coalition that already exists, if you're not already a part of it, to continue to identify the pressing local needs and prepare members for meetings, because it may be your local branch that you might want to meet with. Not for a full-blown community benefit agreement, but you may want to start doing small-time CRA advocacy and have that conversation with a more local branch of, hey, we see that you may need to be open an extra hour, or we may need to have a conversation on your mobile app. We're seeing that people actually don't know how to use it, or conversations like that, where that can start to come forward, but you'd be prepared in having the data and understanding what that bank is doing. And then there's usually listening sessions where we introduce the banks to the network of nonprofits that we're already engaged in. And we start to have those conversations, and then if needed, pressure can be applied in the form of public comments. There's also policy advocacy work that NCRC does as well. Next. And then the negotiation process goes forward. So a proposal is created with NCRC with a comprehensive list of strategies and priorities identified by the members. NCRC is doing a lot of the presenting and negotiation, but it's always done with the members and for the members, and the members are very much engaged. But if anyone's going to get yelled at, it's not going to be any of you, which is great. And then a draft is created. It's always shared with the members for feedback. There's lots of back and forth conversations. It's a slew of emails. And once that draft and feedback is provided, the continued work with the bank happens before a final agreement is addressed. And since there is a coalition already here, and UMCO was just pulled together. You're more than welcome to talk with the members there, if you aren't already, to discuss how that community benefit agreement came to be. And I think there's a few other things brewing that I'm not an expert enough to talk about, but Jerry Kelman is. He's just very busy today, and his email address is on the card. Next. So, again, we'll talk about when we actually can get CBAs, which is the mergers, when the bank is expanding. We want to look at where that's going. And then renewals. It's been a new phenomenon that banks have started to reach out to NCRC before their exams come up, or at other times where they're going, maybe we need to check in on this. And if someone's already done all the work in pulling a coalition together, they've already pulled all the data, we'll reach out to NCRC to get in touch with the member base that NCRC has. Because again, NCRC can't do this work without the members on the ground and the insight going in there. Next. And so when using the CRA, the community benefit agreement is announced. There's usually an advisory council created to oversee it. It's not, here's this agreement and we leave. There's lots of check-ins. It's making sure, was this, so it's tracking the lending. So when there's a commitment to lend $8 billion within low to moderate income communities in the state of Oregon, they're going to track where that's going. And we'll be able to see that in the assessment and in the numbers. And it's a collaborative process with the organizing team, which for you guys would sit within the Oregon Reinvestment Coalition, which is nice because it's one little spot there. And it's making sure that that communication continues to be an open line. Next. And so just some of the highlights of NCRC's work. There's been over 22 banks, over 600 billion has gone to underserved borrowers and communities. 130 new bank branches have been created through community benefits agreements. NCRC does provide a thorough explainer for every agreement they've reached, because they're all going to look different, because it's all driven by community needs and assessments. Next. And so, any questions before we do previews of the other ones? About the CRA exam, about possible ways to negotiate? Okay. Hearing none. First, Tennessee, our biggest concern there was small business lending. So we did increase CDFI financing of over $150,000 into $9.4 million. And that was based on data and feedback we were getting from community organizations. Huntington Bank, the bigger concern was mortgage lending to Black borrowers. So we'll see within 1 year, we were able to increase loans and all lending data. There was a 20% improvement. Year 2, home purchase loans to Black borrowers increased by another 39%. So just under 60% total. Next. And we'll do an increased focus on CRA activity and merger review. So banks have started to provide more detail in their merger application because of some of this pressure, or that's what we would like to believe. So we're seeing how the mergers will benefit the public. I've seen merger applications where they'll state best practices from the bank they're adopting, and they'll go, we want to continue this and incorporate it into the work that our other branches are doing. We'll see that they do have plans to hire more people who may speak languages in the community that they haven't encountered before. They're working with financial literacy programs to reach out to underserved communities. And we're seeing that we're getting more data and transparency to start tracking CRA eligible support, which is really great. And it's been really nice when we can have this data there. Next. So, other areas where you can go into if you want to learn more. So we do have some responsible banking ordinances in certain states. Oregon does not have one yet. I highly recommend going for one, especially since Washington seems to have one as well. Could be a decent model. or it's an addition on responsible banking on top of the CRA. But the CRA can be a really powerful tool there. And I will direct you to NCRC as well. There's a ton of resources earlier in this slide, which I will do what I can to make sure you get all of that, to make sure that you can do the research and getting your own home lending data, and to figuring out how to best research your banks if you're looking to target a bank specifically, or if you're just nosy and want to know how your own bank is doing. Because I never would have known that my bank failed their CRA exam if I hadn't started working for NCRC. It was very fun to come into NCRC and go, here's my bank that you now have to direct deposit to. And they're like, we're doing a community benefits agreement with them because they just failed their exam. But my experience with that bank was not what other community members were seeing. I'd had a checking account since I was born. I'd gotten free checking my entire life because of a college connection. And then they would upgrade me as appropriate. It just happened 2 weeks ago. I got a better checking account. Didn't even have to ask. I can pretty much guarantee you that someone in my exact same position, if they're a person of color in Detroit, is not going to receive that same level of service. But I wouldn't have known that had I not known about the CRA.
Is there only community benefits if they fail?
No.
CRA?
No. So it's one of the ways to start that conversation. But if a bank is merging or acquiring new branches, that's when a conversation around a CBA can start. And that's where public comment can start. So community benefit agreements can come about when there is an exam, and those conversations through public comment start up, and we see that there's home lending data. The stronger the data, the more reason to hold the meetings becomes. And it may not just be in the numbers, because we may never even get to the origination stage of a loan. So if you know there are people going into this bank not feeling comfortable to apply, being told they can't apply, the paperwork load is too heavy, they need this, that, the other thing, and a pay stub from 5 years ago, that needs to be reported because that's not going to show in the lending data. And so when that acquisition or CRA exam comes up, that's when a community benefit agreement can start to come together. And then we'll see that banks are starting to come up to NCRC on their own as well.
When you turn in our registration, you'll send us the slides.
Yep.
You know what to do with the slides.
That's okay.
So hopefully.
Yes. Yeah. And I do think a lot of these are being posted online as well. And I think Housing Oregon's doing a pretty good job of making sure that all of these materials are going to go out, because I talk fast. I'm aware. But again, community benefits agreements can happen during mergers and acquisitions. So you're going to want to Google, alert the banks you're interested in, possibly join the Oregon Reinvestment Coalition, because they're going to let you know when those are happening, because it's a 30-day window. Most banks are under exam every 3 to 4 years. Occasionally, there's a bank that goes 10 years in between exams. That's always fun to find out. And a way to find that out is to research the institutions that you're interested in. Whether it's your own, the ones your clients are going to, those are going to be things we're going to want to look into. We've found opportunities there. And it can also just be an opportunity to talk to the CRA officer at that bank, or even the lending officers, because I'm going to give some other banks some slack. They don't know what they don't know. They're not going to see everyone who comes through the door who looks uncomfortable. They're not going to see someone who has a bad interaction with a teller. They're not going to see someone who's literate, but not financially literate. Where if they know there's assistance out there in the community, they may be able to up and run programs they've had in their back pocket for a while. I can tell you from personal experience with that work, on as soon as people found out there was a law firm that would take landlord tenant cases, the cases we got just grew, because they knew we were there and that we could handle functionally literate clients. And we told them, no, we don't need this to happen. We can do this. We can work with this. We'll make sure they understand everything that's happening. And if they're afraid of it, that's fine. So it's one of those things, and if you don't know about the resource, how do you direct them? And how do you best engage with them? So I do think it's a lot of outreach and having those conversations. Other questions? Concerns? Comments? Please don't make me send you out this early, guys. Is there anything we'd want to go back? Do we want to go over the history? Do we want to look at the test again? Because the test is made up of 3 components. I know some of you guys were here earlier because it's the lending test, service test, and investment test. And each of those, yes. Mm-hmm. Yes, it is. Mm-hmm. So, yes. So the question is, do we think the Community Reinvestment Act test is going to change from the 3 components, and will new additions be made given the change in regulations? Did you say that's fair?
Fair.
Great.
Perfect.
Okay. All right. We'll address question 1 and then question 2. Thank you. So I have a feeling that the test is probably going to stay pretty similar, but I think it'll probably become more detailed on what needs to be reported and what are we actually going to consider as services, investment, and lending. So there was an interesting conversation earlier about services regarding types of accounts and credit and deposits on, everything from I-10 accounts to untraditional savings accounts, different types of saving account access, checking account, direct deposit, and gaining access to all of those types of services, and also low fee checking accounts or no fee checking accounts. I would think that would probably go into the lending category, even though it's more of a service provided. And the only reason I lean towards the lending is I have a feeling that banks may be worried that they're going to be making less home loans for the foreseeable future, given the lending rates and the very intense foreclosure meetings I've been going to. There's a bit of a fear, which is understandable. People are going to be going for less home loans, but I do think it counts as somewhat lending activity because we may be talking about more small dollar loans. Does that answer the first question? So I think the test is going to stay pretty thorough in what it is now. I think it's going to get more detailed and look at more information because a bank's performance is more than just lending. And I think having more detail might be useful. Others may disagree. And then your second question is, how do I think it's going to change the community benefits conversations? Great. So I think it's going to change them because it's going to become more targeted, and we're going to talk about banking in a different sense, not just loans. Loans are great. Home ownership's great. Small business ownership is great as well. But being able to become financially literate is so important. I am an outlier at NCRC for holding this, but I'm also the one that's on the ground. As a legal aid attorney, I get all of my clients' financial data to make sure they're eligible. So I see what's in their bank account, what's in their checking, what's in their savings account, how much they make every 2 weeks, and their full income and how that looks over a year. That's an insane amount of financial data for an attorney to look at. But I can tell you, if they had access to really good financial literacy services, some of the problems would lessen. It wouldn't fully bring them out of poverty, but it would help. If we could get them in connection with food stamp programs, make sure they're actually getting their Medicaid, maybe a pay for a short period of time, just to figure out when should bills be paid so they don't get an overdraft fee, that savings account might go from -$5 to $500 in 6 months. And I think that's life-changing for some of my clients, where $200 changes things. So I think it would change the conversations to go a little more micro level and actually talk about how community organizations versus banks talk about financial literacy, because I think there's a disconnect there. That is the opinion of Rebecca Johnson of Legal Aid of Western Michigan and not NCRC.
Not counseling, financial capabilities, one-on-one services, in addition to the financial literacy program. The classes.
Yeah, because we've seen those programs in Michigan. I looked at that Kalamazoo is pretty progressive in this space. And we see that those programs do provide a great deal of services, but my clients aren't telling me the banks are being involved. It's a lot of the credit unions, or they have a payee. Sometimes they want to get rid of their payee. We tell them not to. Sometimes we need to get rid of the payee. But I'm hearing those conversations and I'm not hearing banks being involved, but I will hear banks say, well, we want financial literacy classes. And I'm going, great. We may need to talk about what that looks like, because I do think it's really important. Because if I look at my caseload, 40% don't have bank accounts, and one lady's facing an eviction because she doesn't have a bank account. And it's all because she's in federally subsidized housing. You have to report what's in your bank account. Since she's receiving state benefits, Michigan has a debit card system. I'm not going to question why that is. It's fine. So I'm having to talk to a landlord and to HUD about, like, here's what we have. It's akin. Let it go through. I'd like to not sue you. Please let me do this. Thankfully, opposing counsel's pretty good about this. But now I'm starting to have a conversation with a single mom of 3 about, you might want to open a bank account. And we might want to start one for your kids too. Because I know when my grandpa started one for me, that helped me out a ton. I'm not going to credit it with everything, but it was useful. I really am not good at repeating questions. I will get better. Other questions, comments, creative thoughts on how to use these agreements? Right.
Internet banks.
Mhm.
What do they say? What do they quietly under the radar, gathering deposits, offering banking services without being classified as bank? And I don't know if these other CRA.
Yes. Okay. So we're going to go in a little bit of hypothetical because I don't fully know. However, if it is a financial institution that's regulated either by the Federal Reserve, the FDIC, or the OCC, they would have an obligation. And banks cannot gerrymander their way out of low to moderate income communities. So with this hypothetical bank that we're just going to call online bank, what city do you want them making loans in?
Well, that's the advantage that they have, that they make loans everywhere, and if they don't have a bricks and mortar location, the argument is, I'm not subject to CRA, because I'm not taking deposit targeting any community.
Right. Okay.
I'm available to the masses.
Right. So I will get better. So the question is, how do online banks fall under the CRA, and how do we figure out if they do or they don't when their lending area isn't tied to a brick and mortar bank?
I'll give you a better question.
Okay.
Because that wouldn't be fair to ask you that. We
Well,
don't know.
let me finish it real quick
Okay.
because there's a bit of a trick. So we do look at brick and mortar institutions when evaluating an assessment area, but we also look at the metropolitan statistical area where loans are being made. So if this online bank says makes loans in New York, Portland, Washington, and a couple in Albuquerque, we can look at all of those areas as their assessment areas because they're originating loans and doing work there. So if they have loan origination there, I would argue accounting and business there, they have then just subjected themselves to each of those assessment areas. This is a better question for Catherine at NCRC, who can more fully answer that, and possibly Kevin Hill, who's also engaged in the policy area. Because I would argue, I think with a fair chance to a judge, no, they're covered. They're doing the work. Just because they don't have a brick and mortar doesn't mean they're not there. Because even if a branch closes in a low to moderate income community, they still have that obligation to serve that community as a bank.
Well, and even the ones that don't do a lot of lending, they do a lot of deposit gathering.
Right.
And that's a core banking service.
And so under the CRA, you can't just pick one. You have to do credit and deposit.
Right. So the simpler question that I was going to ask you is, I've talked to some of them. The answer is, well, we're not subject to the CRA, which is technically correct, but historically hasn't been. So is the goal to get them to be subject to the CRA because they are offering, I'm calling it banking-like services?
Yes. I would direct you to the policy team that NCRC has, because I don't want to speak for them, but I think so, because when I hear they're still doing banking activity, why wouldn't they be subject to the CRA? But then the other question is, who's regulating them? So I think it may be, this is when you get to skip the manager and kind of go corporate and go to the regulator and go, here's the bad behavior we're seeing from these institutions. I'm not entirely sure what bad behavior you're seeing. My instinct tells me closing accounts, not giving proper interest.
No, and I haven't seen any bad behavior.
Okay.
So I'm not pointing the finger. I'm just saying that's a bank.
Mhm.
That's not being treated like a bank.
Yep. No, I would agree.
Should they be? But again, I'm not asking you. I'm
Yes.
thinking out loud here.
Yes. But no, that's a kind of what a part of these like meetings are, because to a lawyer, and I was talking to my team in the office, and we're a bunch of lawyers who do housing law, and I'm the only one who really knows the Community Reinvestment Act. The fellow attorneys know what it is, but to have a law that's an affirmative obligation is such a gift that it's one of those things of why aren't we using this and leveraging it more? Because it's so rare. We have a lot of things that are fighting discrimination, but nothing that obligates somebody to act. I mean, honestly, I'm fighting a city ordinance that obligates the city to act, and they're not doing it. It's great fun. We don't know how to handle it yet. That's a me problem, not a you problem. But the CRA is so clear. And community benefit agreements are a really good way to go about that. But also, it's just so is engagement with your local banks in the area. It doesn't have to be hostile. Having that data is really useful, though, because then you know how to engage best with your community and have those fuller conversations. And Catherine and Jerry are better at explaining the home lending. Okay, Catherine is better at explaining the home lending data, especially when it comes down to the assessment areas you're most interested in. And that's where you can really dig into these issues. And I do think it's divided up in a pretty easy and digestible way, but also a useful way as a tool, because we do have race, class, and we look at assessment areas specifically, and we're comparing lenders to lenders. So if the bank says they're a small business bank and that's all they do, great. We'll look at their small business loans. If we have a bank that says they only do home loans, we'll look at their home loans. If we have a bank that's doing both, but we see they're trailing the market in one, it's okay. Do we need more loan officers for this one area? Do we need more loan officers who have appropriate training and who know how to deal with these issues where you're trailing the market? And maybe a language gap, maybe a cultural sensitivity gap, and maybe that person's just rude and we need to get them out. There's a whole lot of solutions. And I think the more creative and innovative we get, the better it goes. Questions? We have more time. No? We can go back and look at like what the test looks like, if any of you want. Or do we need coffee? Do we need a break? This is why I don't talk. I really should talk slower. All right, so hearing no questions, I'm gonna let you all go if you'd like. I will still be here. So if you want to talk or have separate conversations, let me know. Again, there's the Oregon Reinvestment Coalition. So this is not starting from scratch here, which is great news. It's a really good area to start from. Because that way, if you want to talk about what does the data look like for where you're at, you'll get to understand it better. And this does apply in both metropolitan statistical areas and in rural areas as well. And a lot of banks are interested in hitting rural markets, and they're still trying to figure out how to do that. Because I know that's a problem. So thanks, everybody. Gonna let you out early. Mhm. Me. No, wait.